This is a great slide, or it's a great topic. So Bernanke on his Brookings blog yesterday was criticizing the House's proposal to use Fed capital to fund highway construction projects, which provides us a convenient opportunity to revisit. We're 6 years into this, but it's pretty remarkable how many people just don't quite understand how it works. So just the mechanics of QE and how it supports the fiscal side of the House. So if you're looking at our slide here and you look at the right-hand side of the chart, how does QE work mechanically? So it leaves out some details, but this captures the essence of it. So
yeah, this is pretty good.
The Treasury issues debt.
Yeah.
The Fed prints money and buys the debt. The Treasury pays the Fed interest, so same as it would pay anyone else. If China owned the Treasuries, we'd be paying China interest. So the Treasury pays the Fed, and then at the end of the year, the Fed gives all the money back to the Treasury. And
it's essentially just free money.
Right. And so
money that just goes around in a circle.
Exactly. So you can see here in 2014, this is the latest data we have, but Fed gave the Treasury back $96.9 billion for the year. So if you look at cumulative impact since QE really went in force, since call it 2009, we're talking about something like $500 billion of cumulative remittances, as they call it, back to the Treasury. So not only are we lowering the cost of U.S. external liabilities through QE, which has ended, but so we buy QE, yields come down, so the liability costs come down for the government. But we've taken, so the other line on the chart here is remittances as a percentage of net interest expense. So that $96 billion we sent back was 42% of net interest costs for the U.S. government, which we would have paid that to someone else. We effectively paid nothing because the Treasury gets it back.
Yeah.
So the effective cost of capital for the Treasury moves towards 0% under this scenario.
This is a pretty good chart.
So anyway, moving on. Back to the fundamentals.
Well, I have a question. Is it Ponzi land, or is it just?
People really don't.
Self-funding that people don't realize.
Yeah, it's just kind of it's a little bit under the radar. They don't advertise this cycle. If it would probably get some kind of investigation or something if it was on the private sector side and it was a public company.
Yeah.
This kind of.
Clearly they can do whatever they want.
So, but anyway, it's to our benefit, I guess, as it goes. So.